hundreds of thousands of drivers, right? So I think it's too bad for them that like you might have 5 bad incidents out of I don't know how many rides. There must be millions of rides, right? And then there are 5 bad incidents, but that's the business, right? It's ironic that they announced their $40 billion valuation and the $1 billion raise. So some people put $1 billion in, and then maybe 2 or 3 days later, there were these really bad articles about, someone was, there were altercations that occurred in the vehicles with some of the drivers.
Isn't the 40 billion artificial though?
Well, it is until someone, if you put money in at a $40 billion valuation, it doesn't mean anything unless someone's willing to buy your interest for something more than that, So yes, it's sort of artificial. People could say that about most venture capital investments.
Sure.
Truthfully, until you can exit, until you can sell your interest to somebody, it's probably worth zero. Really, it's worth nothing until you can liquefy it. It's a piece of paper, right? What's that worth? So the answer is, and that's why I talked about exits being so important in venture capital, because otherwise it's just a piece of paper. It isn't worth anything. So that's how we started in the business, was those first bunch of investments. Today we have the largest venture firm in between the coasts, and we're invested in probably 30 seed stage deals today and about 20 early to late stage deals. So what do I mean? Basically, early to late stage for us is investing at least $3 million, and as much as our largest investment is $63 million. You don't start out, at least in our business, investing $63 million, but what happens is, as your company is growing, as the company you've invested in at an earlier stage grows, they need more capital to grow even more, and in the venture business, you want to feed the companies that are doing really well, and you want to cut off the ones that aren't doing very well and just starve them and let them go away, because you're not going to make any money on those. The ones you want to feed are the ones that are growing and where you can make money on your follow-on investing. So the $63 million investment is one where things have gone very well, and so we've wanted to continue to invest in the company. We think that company, which is based here in Chicago, will be a multi-billion-dollar company. We think it's a big home run for us, grand slam. But most of what we do is not like that. It's we invest initially at $3 to $8 million, and then if it goes well, you feed it.